Hey guys, Taylor with GammaEdge here, coming at you with a market recap for March 26, 2025. Today is marked by a heavy selling day. Our key levels and tools help us identify this, so let's get into that. Starting with pre-market game plan. So we always start with our market trend model, but this is simply our way of gauging trend and momentum in the market on a swing trading time frame. Coming into the day, there's a bit of a contrasting signal. But before getting into that, backing up, the market trend model is built off the tick index, which is a measurement of real-time buying and selling in the market. So what we do is we aggregate that data, create a time series day over day, so we can understand kind of the broader trends in the market as opposed to just looking at the single day tick. So here is yesterday's what it looked like at the close. We had a bit of a 2-day push, and then we rolled over yesterday afternoon, right? Finishing near the lows and below our short-term moving average ribbon. Again, that short-term moving average ribbon is really good for swing trading. It's good on kind of a 1 to 3 to 5 day basis. We lost that ribbon, so it had us a bit cautious. However, in the long term, above this longer-term moving average ribbon, that was constructive. So this had us cautiously optimistic. However, we needed to see recovery of the short-term moving average ribbon and progression higher. If we noted last night in the market video that if we saw any kind of waterfall or rolling over, then that is definitely a sign to sidestep this market if you did get long anytime over the past couple weeks after this impulse move higher. So once we understand trend and momentum in the market, the next thing that we like to do is we like to go to the SPX option structure to understand how call and put speculators are positioned. Reason for that, right, is because the options market is forward looking as opposed to a price chart, as an example, is only backwards looking. Point two is this is a representation of where people are placing their money. Point three is there's a significant amount of option activity that takes place in today's market. So if you're not understanding what's happening in the options market, then you are missing a significant part of what's happening under the hood. With all that being said, looking at SPXA, which this is the AM settled contracts, so that's your monthly and your quarterly expirations, as opposed to XPXP that we'll get to in a second, which that is your shorter term daily and weekly expirations. So this is kind of your cruise ship. SPXP is more of your cigarette boat. So from a longer term money point of view, the structure, while thawing in terms of put dominated strikes, is still a mixture between call and put dominated strikes. The overall complex is still put dominated, so there's a lot of work to be done before a bullish foundation is in place. And just so you can see what that looks like, here is one from the past where we can see that, this is call dominated, a lot of green, call dominant above the spot price. This is more of a bullish foundation. Before moving on to SPXP, another data point I want to discuss quickly is for SPXA. These are our true delta and true gamma zero plots. This is just a time series of them. And what this is proprietary calculation where we're determining the theoretical balance points between calls and puts in the structure, both from a point of view of delta and gamma, and these are price insensitive calculations. And so what we did note is the trend is still lower on both of these, and in sustained bullish periods, these are trending higher, which signals to us that calls are coming back to the complex and they are generally dominating put speculators. And again, in our view, the market is a sine wave between out of the money call and put speculation. So it's clear as prices roll over, so has the speculation between call and puts, hence the downward trend. So this is what we need to see reverse. And again, keep in mind the SPXA is the cruise ship, so this doesn't happen in one day. This is a longer term process. Moving on to SPXP, again, this is your cigarette boat. This is your 0DTs. This is your weekly expirations. This is where more speculative activity happens. The contracts turn over a lot faster. And so what we have been seeing here is evidence that the structure has been thawing in terms of put dominated versus call dominated. As an example, here's a structure from March 5th for SPXP. And here, just look at the contrast. This is completely put dominated structure, as opposed to here, seeing a lot more green, a lot more call speculation in the complex. So that is one of the values of our dashboard, is it's a visualization of the option structure. So it's very clear and visible to see who is in control of the structure. So again, after we understand the structure, we then look to see where are those key levels in the structure of where once price is able to get above or below that specific zone. We don't think them as specific levels, but they are zones in the structure. And that is to where call or put speculators can start to exert their force more just through the very nature of positioning and the moneyness of those options. So with today's structure, that key delta transition zone was 57.80 to 57.55. So from a bullish point of view, we want to see continuation in the market trend model, right? We want to see that continue higher. Well, here's a screenshot or preview. It didn't trend higher, but coming into the day, we wanted to see that trend higher. And then we also wanted to get above 57.80 and hold that level, both of which did not happen. Before getting to 0DT, we also need to look at the GEX ratio. It's a key part of our pre-market prep. As background, the GEX ratio is simply looking at total call gamma in the complex relative to put gamma in the complex. Above 1 means more call speculators are in the complex. Below 1 means more put speculators in the complex. You can think of this as the traditional put-call ratio. However, this is superior in our view because it implements time through gamma. So it inherently puts more focus on the shorter-term positioning due to gamma. So, if you put 1 million contracts on a year from now, that could significantly impact the put call ratio, but it's not going to really impact the GEX ratio because that's a year out and there's not a ton of gamma associated with that position. As opposed to if you put that a week out, that's going to have a pretty meaningful impact. But anyways, the reason we bring this up is because the trend was certainly higher. And so, right, this is the tricky part of the market. Again, we say it's a mosaic approach. It's number one factor, but it's how we use the tools as one. And so there's multiple things to consider, right? It's the market trend model, it's the positioning, call versus put speculation in SPXA, SPXP complex, and then it's if those key levels are being overtaken or not. And so before getting the 0DT, we can definitively say from a momentum point of view, it's stalled a bit in the short term. From a long-term positioning point of view, SPXA, a lot of work to be done. SPXP, short-term positioning, there is some thawing seen, which again, the short term is going to thaw before the long term, so that makes sense. But those key levels in the SPX complex were not taken out yet. So again, a reason to be somewhat cautious. But then independent of all that, right, we can look at SPX 0DT, which is kind of its own animal. And here, positioning coming into the day was fairly balanced. Prior day, it settled right in the middle of the transition zone today, which is not crazy. We see that happen all the time. The reason for that is because within the middle of the transition zone, again, it's kind of the congestion point between call and put speculators in the complex. So it's a natural place for dealers, market makers to have minimal risk, therefore kind of a minimal need to act. That is why we call it the chop zone, because generally the characteristic of price within this zone is choppy price action. Once we're able to make it through either the top or the bottom, that is where we expect to see a directional movement continue in that way, so long as intraday volume supports it as well. But nonetheless, like in the full complex, 5780, that was the key level of both the GEX and the DEX transition zone. To the downside, 5760 was the key level in the DEX transition zone. Then we also have the drunken sailor zone, which you can think of this as kind of goalpost of really needing to see intraday volume activity trend in that direction to overtake these kind of large key strikes in terms of positioning. And those levels were at 57.95 and 57.45. So going to the chart now, reviewing the day, have those plotted out here for you. The purple box is your DEX transition zone, and the green box is your drunken sailor range. You can see we opened, pushed right to the top of the DEX transition zone. We're not able to take that out. Then we saw mean reversion, choppiness, again, then pin more or less to the bottom of the DEX transition zone and the bottom of the drunken sailor range. Again, choppy price action should be expected here. Not able to break below that, and then it was a waterfall the rest of the day, particularly once we broke the bottom of the DEX transition zone. And the difference that we saw today relative to especially last week and early this week is we saw volume support this move lower. And when we say volume, this is what we mean. What we do on an intraday basis is we analyze SPX 0DT intraday volume through what we call centroids, which is effectively just the center of a distribution. So what that means for you is every 5 minutes, we aggregate call and put volume for that 5 minutes. We understand the distribution and we plot the centroid every 5 minutes on this chart. We connect the dots and we form trends. So we can understand the behavior of calls, which is the green, and puts, which is red. We can understand their behavior during the session, and based on any point in time through what has happened in the session, we can kind of project all things equal, and they continue to transact in the way that they have been, where price could be headed. And so here today we can see that behavior was in a downward trending motion. There was no call speculation higher. Put speculation was mostly rampant to the downside as well. You may be saying, okay, cool, this chart is at the end of the day. What did this look like at the middle of the day? Or how is this useful? I'm glad that you asked that, because here's an example at 1 o'clock, for instance. Here's what our volume chart would have showed you. So again, call speculators were transacting lower on the day. Put speculators were transacting lower the day. So all things equal, we can understand, okay, if this behavior is going to continue, then this is the a likely projected path of price, which is lower throughout the session. So, if you're a directional scalper or you're a credit spread trader or butterflies or whatever you do, this can be very useful in informing what your trades throughout the session can be. And then again, each session we stitch together everything that produced throughout the day, just create a gift. And what you can see is, what we just talked about, call speculation throughout the day was trending lower all day, put speculation followed, and really not a ton else to say there. Utility of that tool should be clear now. So again, just recapping, starts with a market trend model. Important to note here, we saw a waterfall linear down day. Again, last night, this morning, we said that's what we didn't want to see if you're a bull. We saw significant selling support that move. By significant selling, I'm talking about what we call the filtered tick, which is measures plus or minus 1,000 tick readings, which is a general benchmark accepted by the market as being significant. So when we start to see this firing in one direction, that's another sign to us that, hey, we need to pay attention because something major on an intraday basis is happening. So you pair breaking of the key transition zones in the 0DT complex, intraday volume trending lower, seeing significant selling via the market trend model trending lower, and that really helps us paint a clear intraday picture. And so right from here, the bears are firmly in control. Trend is lower. I suspect tomorrow's pre-market SPX 0 or SPX full complex structure is going to look pretty bearish in terms of puts coming back into the complex. Going to take a lot of work to take out the top of those transition zones. So the rally recently was nice, but simply is just a lower high for all intents and purposes right now until it's proven otherwise. So with that, all that I got for you guys tonight. Hopefully these videos we been doing to recap sessions last couple weeks you found valuable. If you want to learn more about what we do at GammaEdge, in the comments below here, we have, curated playlists for you of kind of deeper dives into our tools, into our methodology. Additionally, you can go to our website, GammaEdge/education, where we have multiple free courses. We have a couple newsletters, a pre-market, and a weekend education, and then blog posts as well for you guys to go learn kind of more about our entire methodology. We don't really hold anything back there. So with that, would appreciate a comment letting us know, if we're missing something in the analysis, you want to see something else on a nightly basis, happy to do it. Just, let us know if you're getting value from this or not. So with that, have a good night. We'll see you all tomorrow. Bye.